Welcome back to The Explainer. Today, we're unpacking a fascinating, highly secretive macro trend that is quietly taking over the financial strategies of the ultra-wealthy. We're looking at a massive, completely silent shift of wealth from digital to physical, a trend that data suggests is accelerating rapidly as we head toward 2026. Now, this isn't about your traditional investing. This is about the complete re-engineering of how legacy wealth is actually secured. So forget Wall Street algorithms and crypto wallets for just a second, and let's dive into this. So where does the 0.1% actually hide their money today? For years, we all kind of just assumed the answer was complex offshore digital accounts, tech stocks, or maybe some heavily layered shell companies. But the data reveals a completely different reality. The true elite are quietly funneling their assets into what are essentially billionaire black site vaults. And to really understand why they're locking away all this tangible wealth in invisible fortresses, we have to look at what exactly they're running away from. Section 1. The collapse of digital trust. The shattering of the safety illusion. Right now, we are witnessing a severe wave of high-profile institutional cyber attacks. And we aren't just talking about individual hackers in basements here. We're looking at systemic breaches of massive financial institutions. These events have totally exposed critical vulnerabilities, fundamentally rendering digital wealth vulnerable in ways the elite simply will no longer tolerate. Honestly, the screens we stare at every day are starting to look a lot less like bank vaults and more like open windows. And this builds directly into our next major catalyst, the 2026 push towards central bank digital currencies, or CBDCs. The source research notes that as governments worldwide gear up for these centralized digital rollouts, it's driving a pretty severe panic among the ultra-wealthy. The reaction is an urgent flight to physical. Whether you view CBDCs as just a natural evolution of finance or as a concerning overreach, the data shows that high net worth individuals are definitely not waiting around to find out. They are moving straight out of the digital crosshairs. Because of all this, we're experiencing a massive paradigm shift in how traditional institutions are viewed. We've shifted from seeing banks as unshakable safe havens to viewing them as massive liabilities, basically single points of failure in an increasingly unstable digital economy. Think about it. If a single digital network goes down or a policy shifts overnight, a digital bank account is just frozen. The 0.1% are realizing a really hard truth. Digital money is only yours if the system actually allows you to log in. Section 2. The Physical Wealth Renaissance. Let's look at this deliberate pivot. So what exactly is moving into these dark vaults? Well, we're seeing massive accumulation of highly specific, tangible assets. Think less stacks of cash and more high-grade bullion like gold, silver, and palladium. But it even goes beyond precious metals into rare earth minerals. These are the literal, physical building blocks of modern technology, which means they hold intrinsic, undeniable physical value that no cyber attack can ever erase or delete. Because of this, massive physical custody has quietly replaced the digital bank balance as the absolute ultimate status symbol and insurance policy for the top 0.1%. I mean, having $1 billion on a screen is one thing, right? But having $1 billion of high-grade bullion physically secured in a mountain vault, that's another thing entirely. It is quite literally the ultimate hedge against a digital blackout. What we're seeing is a profound psychological shift in the minds of the world's wealthiest individuals. It's a hard pivot away from that exhausting chase for volatile 10x digital returns, like tech stock leverage or crypto spikes, and a move toward absolute capital and legacy preservation. When you reach a certain level of wealth, the goal is no longer multiplying it. The goal is ensuring it simply survives the next century completely intact. Section 3. Inside the sovereign vaults. How these global fortress economies actually operate. To really understand these vaults, you've got to understand the most important phrase in elite wealth management: zero counterparty risk. This is an asset holding strategy completely free from reliance on a lending institution's solvency. In plain English, it means your wealth absolutely doesn't depend on a bank keeping its doors open. If a private vault goes bankrupt, your gold is still your gold, just sitting in a box. It's infinitely safer because no one is lending your assets out behind your back. Just consider the difference between a traditional bank box and a private vault. A safety deposit box at your local bank is totally subject to domestic policy reach and bank holidays. Modern private vaulting facilities, on the other hand, offer something completely different: geopolitical neutrality.
The wealthy are legally shopping for neutral jurisdictions, places totally outside the reach of their home country's domestic policy changes. They're placing their assets in global safe zones where local banking crises simply do not matter.
And the architecture protecting these neutral zones? It's literally straight out of a James Bond film. We're talking cutting-edge biometric access, continuous AI-monitored surveillance, and pure black site anonymity. Unlike some massive public financial building in downtown Manhattan, these 2026 private facilities are intentionally designed to be invisible. They offer 24/7 access to their clients, completely discreetly. But just think about the logistics for a second. How do you actually move millions of dollars in rare earth minerals? You can't exactly just wire it, right? Billionaires are quietly mobilizing literal convoys of armored trucks across borders, legally and discreetly, utilizing specialized, highly armored logistics networks that operate entirely outside public detection. It's a massive, completely silent migration of physical mass. Section 4. Building your private reserve. Let's look at applying these elite tactics. So, high net worth individuals use a really strategic, tiered approach that we can all actually learn from. Step 1 is managing liquid cash, keeping enough capital fluid for your daily operations and immediate opportunities. Step 2 is where the true wealth defense happens, accumulating vaulted hard assets. It's a deliberate balancing act between having access to your money right now and ensuring your core wealth has absolute untouchable security. And here is the real breakthrough for the average investor: fractional physical storage. You don't need to buy a massive cartoon-style gold bar to participate. You can own just a fraction, say 1/100th, of a physical asset stored in a high-security vault. This emergence allows regular investors to tap into the exact same vault-level security the elite use without needing to own a private fortress. Now, if you're going to look into using these facilities, our source data provides a really quick, practical checklist. First, you absolutely need to verify the long-term solvency of the private facility itself. Second, confirm their asset protection guarantees. You have to ensure that what you put in that vault is mathematically and legally guaranteed to be yours, completely free of that counterparty risk we discussed earlier. I want to leave you all with this final, provocative thought. As we accelerate into an increasingly digital, vulnerable, and centralized 2026, is physical trust your most valuable asset? The smartest money in the world definitely seems to think so. They're taking their wealth off the grid and burying it in stone. Thank you so much for joining me for this explainer. I really hope it gave you a completely new perspective on the future of wealth security. See you next time.